All right, guys. Hey, welcome to our Wednesday product training call. I'm excited to be able to have Devon Martin from NLG on with us. They're sharing with us about a new product that they have just created that is going to disrupt the insurance space. Because if you know anything about what we do at Family First Life, you give us a simplified issue product, like we take off with it. And so I'm excited to be able to have Devon share this product with us. But before I turn the floor over to him, Devon's been one of the funnest people that I've had to work with as our carrier reps. He answers his phone, very easy to talk to, helps you where he can. And I truly appreciate our partnership, Devin, and I can't wait until Family First Life literally takes over that mark and we are the number one IMO in your guys' space. So thank you for taking time out your day and being on with us, bro.
Yeah, thanks for having me, Steven. Hope you're well, man.
Absolutely.
So, you guys know whenever I have these, I like it to be a conversation and an interaction more than I do an actual presentation. So, I want you guys to interrupt me. We are going to talk about the rumor, and I confirm that it's true. We're coming out with an instant decision, simplified issue IUL. It's going to go live on Saturday, the 20th. All the
Sweet.
marketing and communication has said the 22nd, Monday, but people don't work weekends like Family First Life. So, as long as the technology goes through correctly, Saturday the 20th, you guys will all be able to run illustrations and e-apps. So
I
the
love
rumor
it.
is true. With that said, I'm going to pull up the specifics on the product. And you all know I've never spoke badly about any of my competition, if you will. I have an immense amount of respect for them, but for simplicity's sake, I'm just going to kind of compare where we fit in this space because it's important. So again, I'm going to go on record, not talking bad, but I am going to show some side-by-side comparisons, which I haven't really done before. But with everything said, let's just kind of dig right into it, and then I'll take your questions as we go. So here's the specifics on the policy. This is kind of the one pager where it kind of highlights a majority of the specifics. So we go from ages 0 to 60. I know
Nice.
some other simplified issue spaces go to 65 or older and they're banded. We're just as young as 2 weeks old and out of the hospital, which is already an immediate advantage because I don't know of any other instant decision IULs that go down to juveniles. And we go up to 500,000. As far as I know, the highest is 450,000. We go up to 500,000. I'm going to be very transparent with all of you guys throughout this call. So this is our locker room, and I like to consider myself a transparent person. We will be competitive in specific, especially to the Moo IULE, within $10 to $20 a month in the premium. Where we are very competitive, and by the way, that also means that the cash value is going to be higher because the client's paying more premium. Where we're extremely competitive is in the older ages and the face amounts. I'm not calling somebody old that's in this category. I want to go be clear here, but anybody 40s and older, and when your face amount's higher than 250 or 300,000, we really shine in our specific space. So, who the policy is going to fit as far as your target clients, 0 to 60, 50 to 500,000, and it's instant decision. At the end of the app, you're going to see one of three things. You're going to see, congrats, you're approved, sorry, you're denied, or you're going to see, Mr. and Mrs. Client, you can't qualify for the Rapid Protect instant decision, but if you applied with a fully underwritten product with National Life, you could maybe get approved. And why does that happen? We're not doing as much, questioning and research on the client to offer them a policy with the instant decision space. So maybe they are insurable. We would just have to look at them closer with a fully underwritten product. And remember, fully underwritten is not someone's coming to your house to weigh you and get fluids. It's still part of the easy underwriting process. So those are the three messages that you're going to get. So far, so good.
Yes, sir.
Cool. Steven, you do a good job of asking questions and segueing too. So you can interrupt me as
So
well.
I wanted to ask this question, right? We sold a lot of children's whole life with Mutual of Omaha because I feel like that's a better product than buying a term rider on any policy and then it's going to end at 25. We've been asked for the longest time, Devin, dude, do they do that for like IULs? And I'm like, bro, no one does that. No one in their right mind does it. And now I'm going, wait, you just told me as of 2 weeks old, they can get a children's IUL policy funded like it's a regular standard IUL because they're going to get the same standard rating. How does that work? Like, I'm curious about that because I'm like, dude, we'll sell a shit ton of that.
It's as simple as we had the resources, the technology, and the systems, for lack of a better word, to go down to age 2 weeks older than at the hospital. So remember, we've been around since 1848, and we've been in the IUL space as long as anybody else has. So we wanted to find an area where we could be more competitive. And I'm going to be very honest with you all. Ages 60 plus with instant decision or simplified issue products aren't really necessarily as profitable for insurance carriers because people are more likely to die at that age. So this I'm going to lay in the plane in a second, but it's as simple as we have the infrastructure and resources and technology to be able to provide it for juveniles. And you guys write a lot of IULs with us already at National Life Group. A majority, I shouldn't say majority, but oftentimes juveniles are instantly approved anyway, and
Right.
most children are healthy. That's why it's relatively easy to offer it in this specific space.
Now, here's the follow-up question. Most children's IUL policies that are written with you guys, with our other companies that we offer, the parent has to have double the insurance that the child has. How does it work for this Rapid Protect?
So with National Life Group, the parents do not have to have any coverage. In any
Oh,
scenario, the child can get up to $500,000 in coverage in any scenario whatsoever. If the child wanted 1 million, and we're gonna kind of forget about this product for a quick second because you can't go higher. If the child wanted 1 million, one of the parents has to have at least $1 million on their life.
got it. But so as of right now, if we sit down with grandma and grandma goes, I want one of those policies for my grandson. He's like, 6 months old, blah, 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 blah. We can write that product regardless of what the parents and grandparents' insurance status is.
That's correct.
That is so awesome. We will kill that space.
I want to double click on that for a second. So, Flex Life, fully underwritten, grandparents can own it. If you do the instant decision, the parents have to own the
Gotcha.
instant decision. The
Got it.
grandparents can pay for it. We don't care, but the parents would have to own it on the child with this product.
Got it. Got it. Okay.
Yeah.
That's great. That's awesome. We'll write a lot of that.
Yeah, and as far as a one-stop shop, because I'm big on one-pagers, and I know the agents are as well, this QR code will take you to literally everything about this product, both for the consumer and the agent. So if there's one thing that you would want to have about the NLG Instant Decision IUL, it's this QR code right here. It'll take you into everything that you need to know.
Sweet.
Let's talk about some specifics now. And again, I want to say that I'm probably the most excited about this launch than I have been about anything else working with Family First Life because I know that this is your bread and butter. And we really have a marriage together. It's not just dating or a partnership. And Sean Mike has said that America and National Life Group, those are the marriages. And I'm really excited because in addition to everything we're rolling out with how strong this product is, we're also paying the writing agent 10% more in
Yep.
commission on this product as well.
Yep.
I
That's
want
going to
to
be
see
huge.
everybody, I want to see physically people clapping that I just said that because we're increasing your commission on this product by 10%, which it's always great to work for a company where our story sells and our product is great, but to be competitive with compensation on top of that is truly a game changer. So yeah, thanks for the clapping. But let's talk about some other stuff as well because the details matter. So this is a side-by-side comparison for the third time, not talking bad about anybody, but this kind of
Sheesh.
shows you where you'd have to use National Life Group in this space. So we go up to $500,000. My competition, who I respect heavily, only goes up to 450,000, and you get all the accelerated benefit riders. And we live in a world of language communication, and specific words are important. Accelerated benefit riders are different than living benefits. And what do I mean by that? A living benefit could be our guaranteed income rider on our index universal life policy. That's not available on Rapid Protect. So it's just the accelerated benefit riders. Your cancer, heart attack, stroke, all those everyday events. I realize that other companies have those, but it truly is second to none with National Life Group. So one specific thing, your clients do have to be standard in health to get those accelerated benefit riders. So if they're rated, they do not get those riders.
Question. Is
Mhm.
Express Standard better than Standard?
So they are the same depending on how you look at it. Are you talking about what's on the screen right now,
Yeah,
Stephen?
So you know how like you guys have a preferred and a preferred plus, right? So
Mhm.
like is Express Standard technically better than standard or is standard the higher one?
Standards one higher than Express
Gotcha.
standard.
Okay.
Good question.
Got it.
Yeah.
Got it.
Yep.
Now,
Um,
now here's the thing. You guys have by far, I mean, I call them living benefits, you call them accelerated. Um, critical chronic terminal than any other carrier in the industry. We literally pitched this to one of our clients the other day that I was helping Art with. In California, California is a very tricky state because a lot of our carriers do not have living benefits in California. You guys do with your guys' product. Does Rapid Protect have critical chronic terminal in California?
it does. So in front of you right now are the living benefits, even in the state of California.
Ooh, oh my gosh. Oh yeah.
So I talk about it a lot, and I don't apologize because when I talk about being a mutual carrier, having a great balance sheet, being around since 1848, when we file for state approval, the states are more likely to get that piece of paper off their desk and approve it, given the history and that we have products that we know work and have been around for a while. So it's relatively easy for us to get approved in states. And again, this excludes New York. I'm talking about all the
Right.
49 states. I know that's not necessarily a shocker for a lot of people.
That is awesome. And you guys have more triggers too. Like cuz that's the other thing that rookie agents don't understand. They go, "Oh yeah, yeah, they have critical illness." No, no, no. But what triggers the critical illness rider so they can actually get money? They're like, "Oh, I didn't even know that." I go, "Yeah, you guys have twice as much as most of the carriers that we work with."
Yep. And we can consider 100% of the discounted death benefit, and our maximums are higher. So, not relevant to this, but we pay up to 1.5 million for each lifetime of the insured with living benefits. Some carriers are 250, 500,000
Right.
max. And in the state of California, I think $200,000 pays your light bill there. So, it's nice to have a living benefit that goes up to 1 million, 1.5 million.
Yeah, absolutely. Dude, this is awesome. I'm loving this.
So yeah, let's zoom out from that for a second, and I'm going to talk about some very specific things, but they're arguably some of the most important things. So why would you sell this over the competition other than reasons we just discovered? The application questions are a lot shorter. So if you answer yes to everything, then at most you're going to have 27 questions on the electronic application, and that's if you answer yes to all the
Questions.
conditions being asked. Um, the Alzheimer's rider is obviously a great feature for us as well. This is the side by side for Rapid Protect and Flex Life. So the policy protection period, which is basically the guaranteed no lapse, is 15 years.
Nice.
Different than your IULs, where the older I am, the shorter that period might be. With
Correct.
us, it's just 15 years guaranteed no lapse.
Love it.
You do have to have a social security number. So in
Okay.
our fully underwritten space, you can be a foreign national or you can have a tax identification number, a TIN. You do need a social. Why? We're not able to look at clients with our databases and medical matters as closely with TINs as we can with socials. So at this time, we just can't do TINs, but I dove deep into this. 4% of Family First Life's business is only with tins.
Right.
So 90+% is with social. So not that huge of a deal. This gets into more specifics than I ever cared to elaborate, but I'm going to keep it up really quick right now. Anyways, this is something where I would print out, have on your fridge, talk about it with your spouse at night when you're having pillow talk. This is probably one of the most important things. These are the knockout situations. So I want to be clear on something. If I was playing pickup basketball and I rolled my ankle and I went to the ER to get it checked out, that's much different than me going to the ER for a mental health reason or suicide attempt or drug usage. So please kind of keep this as a guideline, but also have it known. In that same breath, when it comes to placement, we will have a different reporting structure for placement. And I'm going to be clear on this because people group placement with persistency, and they're
Hmm.
two different things. Placement is how many applications do I submit to the company, and actually how many actually end up issuing. We are not at, let me rephrase that differently. I look at placement way closer on the fully underwritten business than I do with Rapid Protect, if you guys can read between the lines. This isn't touching a physical underwriter. We're going to go back and forth for a while with a human. The product is priced in such a way that I'm not going to look at placement as closely in this situation. With that said, don't waste your time or the clients, and make sure you have this in mind. Our general rule of thumb with National Life Group, as far as cancer, heart attack, and all those strokes and everyday events, it's usually 5+ years. So if it's been 5+ years since your last treatment, generally you're going to be okay. That might be a
Mm.
situation though where we would need medical records. So I'll give you a specific example. If a client had cancer 10 years ago and it's in the MIB and it's going to come through and hit our engine, that might say, hey, you're not eligible for Rapid Protect, but if you want the fully underwritten route and we got medical records, maybe we could consider approving them. So just some insight on the
Damn, that's
knockout.
crazy. I thought that that was always going to be any history of cancer was an auto decline. So you're saying 5 years cleared, you guys pull records, and if they're healthy, y'all would give them like a standard rating possibly.
That's correct. It's standard at
Wow.
best. You don't get the critical illness ever, but you are eligible for standard
Do they get life
non-conventional.
insurance though when nobody else would give
Correct.
it to them?
Correct.
Wow. Okay.
Sure. Yes, sir. 5+ years since your last treatment.
That's crazy.
So illustrations. So you do run this in your portal, just like our regular illustrations. You don't have to, you don't have to use an easy solve and go into WinFlex and get a
Mhm.
DocuSign. If you guys can read between the lines there, you can go right into the Foresight system and you can go from the illustration into the e-app. I recommend doing that for 100% of your cases. And the reason why, it plugs all the information into the e-app. Our e-app will be significantly shorter in comparison to our fully underwritten policies or product rather, which makes total sense. Quick pointer. You do have to choose your interest crediting allocations, and I can take questions on them. If you ask me what is the best, I'm going to tell you the same thing every time. Next year, I'll tell you what you should have chosen today. There's no way to predict the market, but with that said, we only have the S&P 500 allocations on here anyway. You can just simply click the drop down and choose S&P, but you do have to choose the interest crediting allocations on this product.
What's the difference between the point cap focus, point participation focus, 1% floor? Like
That's a
what's
good
the
question. So the point-to-point cap focus is the easiest to understand. It's the most common. That
okay?
has a cap and a floor, just like anything else. So the cap's 9.5 and the floor is 0. Whatever the S&P does, if it does 7, you get credited 7.
Correct.
The S&P floor 1%, the cap is lower, but if the strategy did 0%, we're just
You
going
get
to
one.
credit you 1% that
Right.
year. The participation rate focus doesn't, I don't know if it has a cap, and if it does, it's a lot higher, but the participation rate is lower. So if it's like 50%, I'm only going
Got
to
it.
get 50% of what the S&P does, but at least my ceiling is higher.
Correct. So like the easiest, I mean, this is just me talking like simple stock, simplified IUL. Like it's so much easier just to put them in a simple point to point cap focus because that's what almost everybody else does. Like if you're going to get that fancy with crediting indexes or indices, you might as well just go with the Flex Life.
Correct. All roads lead to Rome. They all end up being about the same anyways at the end
Right.
of the day. Yep, you're correct though, Stephen.
Got it. Okay. Cool. Good to know.
Something very specific, and sometimes people who don't sell make decisions, if I'm just being transparent. Chronic illness in the state of California defaults to no. So you do have to change that to yes. There's
Okay.
no costs, but you do have to change that to yes 100% of the time in the state of California.
Okay. What if they forget to? Is there a way they can do an amendment afterwards?
You can do a rewrite. You have to rewrite the policy.
Got it. Got it.
Let's not go that route. I'd maybe have a sticky note on your laptop that says NLG's number one. Oh yeah, I got to add chronic illness on applications.
Right. Okay.
Just something to keep in mind. So this is the way that the submission to commission journey works. The initial premium, the first premium being drafted, you cannot delay that premium. So if the client's approved 100% of the time, other than a scenario I'm going to show you, it's going to draft the day after it issues. You cannot do a delayed bank draft. You're able to change your future premiums, no problem, but the initial premium is going to come out the day after. So make sure they have the money in the account. Um, Otherwise, it won't do any good. Let's say that you chose standard non-tobacco for your client. They applied for a certain coverage with a certain premium amount. If they get express, if the premium is not sufficient to pay for the policy and we have to draft more, it's going to set a 10-day notice to the client. So if I'm standard, I think I'm standard, I apply for a policy, it's $100 a month. I get express for some reason. Now the premium is 120. It's going to draft the initial premium 10 days after the policy is issued because we have to draft more money.
Got it. Got it. So,
The
okay.
benefit,
So
go
I'm going
ahead,
to ask
Stephen.
you an agent question. We're sitting down, Bob and Mary. Bob goes, I want it, but I want, like today's the 17th. They go, I want it on the 1st. So do we just not submit the app until the 30th? Or do we leave it there? Like, what do you suggest?
So I'm never a fan of waiting for submitting life insurance on somebody because anything could happen.
Right?
In your scenario, you would have to wait for the 30th if they true to submit it if they truly cannot make the payment until the first. You can pre-fill all the information in the e-app, click save, and then call them on the 30th to then just click submit.
That's what I'm saying. That's like
Yep.
if we can't push the draft date, then that's what we would have to do in that
Yep.
instance. Got it.
Yep. Um,
But after issue, we can pick the date of whenever they want it to be.
that's correct. Yep. And you can do it in the smartphone application, which I highly recommend as well.
Okay.
I believe the app is good for 30 days, Daniel. It just depends on the state. I actually know it's 30 days. It just depends on the state. And I think California is 30 days. So if that changes and I get confirmation that it changes, I'll shoot Steven a text about that. The other thing I was going to say, the beneficiary does default to the estate. So in the e-app, you can't change it unless it's for children. But we're going to have a one-page form that you guys can just send to the client quickly. They can just change the beneficiary in their portal after it's issued. It's a super easy fix. But
Can
it
you
does
explain
default.
that real quick? When you say it defaults as the estate, what do you mean by that?
So you cannot, if you submit the policy for yourself, you cannot name your wife, your dad, your mom as the beneficiary. It's going to be your estate, and you have to wait to change that until after the policy is issued.
What's the reasoning behind that?
It's a stupid problem to have, if I'm being honest. We could have changed it, but it would have delayed the launch, just to be very transparent. And we didn't want to have it delayed. So,
Got it.
yeah. I do want to emphasize it is a pain. I'm not denying that. With that said, it's very easy to do inside of the client portal. It's extremely easy. So after it's issued and they get the e-delivery, they can log into their portal and just simply change it in the website.
Okay. Now you say e-delivery. Are they going to get a packet in the mail too, or only if they request it?
Only if it's requested or the agent and client do not complete the e-delivery email.
Got it.
Yeah, we never physically mail policies unless the DocuSign has not been completed.
Got it.
Yeah. So I definitely don't want to talk just for the sake of talking, but that's basically what I wanted to cover for everyone. Any questions at all, even if it's something on IULs in general?
So
Janelle, you have access to your portal the day after it's issued.
the day
Go ahead,
after it's
Stephen.
issued.
Day after it's issued. Yep.
Okay. Um, could agent make changes to clients' info through the portal without calling customer support?
No, it depends on what it's for. If you're changing beneficiary or ownership or interest crediting allocations, no. If you're tweaking like the face amount and premium and stuff, yes. So some things are yes, some things are no.
Okay. Because like sometimes your client goes, "Hey, I want to change this," and you're like, "Damn, that's going to be a 45-minute wait on hold," right? So you're like, "But if I can go show you how to log into your portal and make that change yourself, or upload the documents to the underwriters for you, saves me time." So okay, um, Devin, like one of the things I'll say, and I truly mean this, like most of the companies that created a simplified IUL didn't come from the IUL space. So I go, how good can it be? Right? You guys have done, like you said, IULs for as long as you possibly could, like longer than most people in the entire industry. So, like for me as an agent, it's so comforting going, okay, they niche in IULs. That's what they do. That's what they're known for. Now they've created a simplified IUL. It has to be superior than almost everything else because most of these guys never played in that space. You know what I mean? So like one of the things I've asked these other companies when they hop on is I go, when it comes to like internal rate of return, fees, all that stuff, like some of your products will blow up because of your illustration and what it shows. Can you kind of comment on that for like your guys' product of why it should perform better?
Yeah. So here's the thing. Being a 100% mutual carrier, we don't have a stock or shareholders that we need to please. We only have to please our policy holders. And I'll give you a specific example of how powerful that is. We actually publish our historical interest rates inside of our website on all of our products. That shows that we're transparent and that we have nothing to hide. In that same breath, we don't screw clients after issue. And what I mean by that is we hold ourselves to a high integrity when it comes to renewals. As a company, and this is completely legal, by the way, you can look at different books of business or all of your enforced books of business. And you can say, you know what, for this year, for this age, let's go ahead and raise COIs, cost of insurance, by a little bit, and let's go ahead and lower those caps.
Right?
We'll use that money to invest and support our annuity rates, or we want to pay our VP more. That's legal, and that happens all
All
the
the time.
time.
Yep.
National Life Group has never raised our cost of insurance on existing books of business since 1848. So it's
That's
because
cool.
we underpromise and overdeliver with our rates, and we hold strong when it comes to our caps and our renewals.
Do you know what the average return is on the S&P cap?
With IULs,
Yeah.
it's going to be 6 to 7. I'd say 6.5 to 8%.
And see, this is what scares me is like some of our carriers illustrate at an 8.5. And I go, that's dangerous.
I'm going to bet a carrier that illustrates the highest rate of return is not even top five in actual IUL sales as a company. We don't even illustrate top five. I think we're number eight as far as a projection, but we have the number one selling product because we under promise and over deliver.
And that's what I wanted to. So, like, we scream and shout about this. We say illustrations, just illustrations, right? Like, because of AG 41 and some of the other things that were put in place, like, you can't no longer, like, horribly blow those up. For a new agent that doesn't understand that, like, they go, hey, but this other company showed my client that they can make more money. Can you comment on, like, how that's actually not true? Because it's all projected,
Correct. So it doesn't matter what the illustration shows today of what's going to happen in 10, 20, 30, 40 years. What matters is the actual amount of cash value that's credited into your policies for your clients. And that's why we're such a strong company. We could play the illustration game, but we don't want to. At the same time, whether it's life insurance or annuities, if someone is showing a really high cap, and I'll give you guys kind of ways where you can sniff out if it's too good to be true. If somebody has a very high cap where it's substantially higher by 2, 3, 4% in comparison to other carriers, look at what their fixed rate is. If I'm promising a 9% cap, for example, and I only have a 1% as the fixed rate in the general account, that means that I have really bad bonds or junky bonds. And I know I'm getting to the weeds, but this
right?
stuff kind of that's the way to explain it. And the closer that your fixed rate is to your cap, usually that means that they're a more profitable or dependable company, generally speaking. And guarantee you, anybody with a super high cap is a bait and switch scenario in the sense that I'm going to give you a 10% cap year one, but year two, I'm going to lower that to 9 or 8%. That illustration that was looked at a year ago assumed a 10% cap forever. Now it's already lower
Right.
year two, three, four. So that's why an illustration is just an illustration at the end of the day. The only guaranteed thing about an IUL illustration is that it's not going to look how it was designed because the rates are going to go in so many different directions anyways.
So so like a lot of our agents use an IUL to sell a mortgage protection product, right? Hey, Devin, you bought a home. It's a $500,000 home. Congratulations. Hey, Devin, do you make any extra payments on top of your mortgage? Yes, I do. 300 bucks on principal. And then we go, hey, that's a really bad idea. You should reallocate that to life insurance because God forbid you die prematurely, pay off the whole house. But also, if you don't die, like in year 22, 3, 4, whatever it is, you can take a lump sum and pay off the mortgage, save yourself a ton of interest, right? When you like, when people start doing things like that, when they start taking money from the cash value, does it actually hurt their longevity of their policy? Like, what if, like, because this is one of the things I've always been, the Instagram IG reels drive me nuts. Put money in IUL and take it out and never have to pay it back. And I go, yeah, but there's interest against it. So, like, from a carrier rep, like, what is your correct answer or thoughts when it comes to that? Like, you can borrow money, never pay it back. Is that a good idea, or you should try to pay it back? Like, what is your thought on that?
Yeah, I guess I would say that it just depends on the client. So if you take out money out of your IUL, you don't have to pay it back because it's just going to deduct from the death benefit when the person dies. So it is better to pay it back, no question, because you're going to have a higher death benefit, but you don't have to. When you take out money as a loan, as a variable loan, you're still earning interest off of the money that you still borrowed out. If you take a straight withdrawal and you take out 99% of your cash value, probably not going to work out too well for your
Right.
IULs. So there isn't one situation that's better than the other. I guess I would think of it as, let's say that you have a 40-year-old and they have three children and they really need the death benefit. In 5 or 10 years' time, if they had a desperate situation in an emergency and they took out the money, I mean, they have to because it's an emergency, but it might be in their best interest to pay back that loan because when they die, and it could happen, the day after they take out the loan that they died, at least their wife, husband, or spouse gets the money as a higher death benefit. So it really just depends on the client.
You say taking the loan out instead of withdrawals because the beauty of the IUL is you can take loans against your cash value, right? What I'm curious about though is you said there's a variable loan interest. Do you know what that number is? Fluctuates usually with you guys?
Right now, I think it's 4.5%, but let me see because it's been a while since I ran an illustration. Let me see. Um, it's in between 5 and 5.25 right now, I think,
Okay.
as far as the loan. Yep.
But
Yep.
I look at that going like if the interest in your crediting is above that, then you're safe.
Do exactly, Stephen. Exactly. Yes.
That's the reason why I'm curious because you know some people the interest that they're borrowing against is a lot higher. So I go, damn, it's going to eat away at the cash value that's existing in there, then hurts your cost of insurance. That's the reason why I'm asking. So all right, cool. We
Yeah.
have some questions in here.
Oh yeah. If we wanted to change the face amount, can we call? Okay. So I definitely would encourage you guys not to get into the habit of calling the company. So we actually hired a bunch of people over in the Philippines because we wanted to shorten that hour wait time down to like 1, 2, 3 minutes, which we have. I would not get into the habit of calling. Everything you need to do or everything that you would have to do is at your fingertips. So if you wanted to change the face amount, you have the rewrite period. So 120 days for when the application was signed, you can change the face amount however you want. You would just
Really?
submit that illustration through the portal and do it that way. If it's longer, you have to wait to decrease the face amount after 1 year. So if you're outside of the rewrite period, you do have to wait 1 year. Carlos, yes, we can't control what happens after issue. If I have a $500,000 death benefit and it's going to increase by the cash value, the death benefit is able to pass that 500,000. It's just that it can't be higher than that amount at issue.
Start, yeah.
You can take out a loan from your smartphone app and you can get the loan money in your bank account within 12 to 24 hours if you do it through the loan.
By the way, can you talk about your app? Because that thing is, dude. Like I was literally sitting with Andrew at dinner, and I was like, "What is that?" He goes, "It's my app for NLG," and I was like, "Oh yeah, yeah." The quote. He goes, "No, dude, for my insurance policy, I can fund it. I can take." I was like, "What?" That
Yeah.
was cool.
Yeah, so what I'm doing right now is I'm actually pulling up my app. So this is for my policy. I have a few IULs. I'm just going to show you guys one of them. But we have two smartphone applications. We have one for you as agents, which you all should absolutely have. If you have complaints, I'm not going to listen to you unless you have the app about service at least. But as far as your specific policy, I don't care. I'm just going to show you guys mine. So is it look terrible? like it does for me? You can't read that, right?
It's kind of hard to see, but yeah, it's
Okay,
okay.
it's fine. So on the app, you have your summary, so it'll show you all your information, and then you can go to transactions, which shows you your payment, and then we have loan. So you can literally just click request funds, and
That
then
is
you choose
so
the amount you
crazy.
want to take out of it, and you can even change your interest crediting allocations as well. You
That
can
is
do it
so
right here on
crazy.
the app. Yep,
That
I
is
can
so
change my
crazy.
everything on here through the app as a client. So
That is so awesome. Like that's a
yep.
win for because most carriers don't have that.
Yes. I would never ever call the company when I wanted to take out a loan, make a payment, anything. I know it's nice to talk with a live person, but when you call that person, they're just going to send it to a request of a department that already has thousands of requests and a workload. It could be later in the day and they want to go home. This makes it so it's instantaneously going to give you what you need.
Dude, it was I was like talking to Andrew and he goes like, let's say you get a nice IRS tax return and you want to throw some money in your IUL, you can literally just do it from there. And I was like, no. He was like, yeah, bro. Goes right here. And I was like, why don't they talk about that more? Because that is so dope. You know what I
Or
mean?
if you
Like,
owe the IRS money and you need to take out a loan from your
yeah,
IUL, you can do that
that
too.
that too. A lot of people right now are are having to do that. That's true. Um, is there anything else? Okay, so like, are the knockouts for driving record or credit history like the fully underwritten one?
Yeah, if you have a bunch of speeding tickets, you're probably going to be a decline. If you just because you have a bad credit score doesn't mean that you're a decline. But if you have a terrible credit score, that probably means you have other things going on in your life. So to simply say the answer, yes, it's similar to the fully underwritten, Carlos.
What are things, Devin, that like you see? I mean, man, you're a carrier rep. You have the nightmare stories. What are things that agents do that you cringe and then you go, dude, please don't ever sell the product like that? And then there's things that you go, hey, you know what? That's the correct way to sell it. Like, what are some advice points that we can get from you, from the carrier?
Yeah, the worst thing to see is when you design it with such a high death benefit to increase the target and the policy is going to lapse. I'm not saying that minimum death benefit max cash value is always the way. For my parents, when I designed their cases, I actually didn't do minimum death because it's more for their legacy. What makes me cringe is when I see policies lapsing in early years or clients are calling the call center a year or two saying, my agent told me that this was the best thing ever. They told me to stop contributing to my 401k. They told me I had only had to pay the premium for a year or two. So abusing the flexibility, putting a client in a policy that they can't afford, which would probably charge you back anyways at the end of the day. Those are the things that make me cringe. The things that make me happy is watching agents not force client into situations. And what I mean by that is if the client tells you they can afford between $300 to $600 a month, don't automatically assume that it's going to be $600 a month. I'd rather sell $300 a month policies all day and not get a charge back, or sell a $600 a month policy where the client's going to call me every other week and say, I can't make my payment this month. So that's something that I see. And in that same breath as well, not saying that the IUL is the best thing in the world and they have to stop doing everything else. You can't call it an investment. You
Mm.
legally can't. So, and then I'm going to land the plane here. The other thing
No,
I'd
it's
like to
good. Please
see
keep going.
the other thing I'd like to see is everyone not being kind of a broken record and just talking about the cash value. I forgot what Locken I was at, but they did a call with a lead and they put them on speaker. And the lead was literally talking about how their mom passed away. I think it was cancer. And the agent just proceeded to talk about how great the cash value and retirement aspect of the IUL was when they could have talked about the accelerated benefit riders. So
Right.
understanding that you could have a 40-year-old with five children who needs life insurance, even though they like the cash value, or you could have a 40-year-old who's a millionaire and needs more money for retirement. So just making sure that you tailor it to what best fits the client at the end of the day.
When we do the wrapper protect, is it defaulted on level or increasing? Do we get a pick? Like, how does that work for you?
You can pick, it's going to
Okay.
default to level, a specific face amount, and then rapid solve. That's what the default's going to be, but you can
Okay.
change it however you want.
Okay.
And I want to be honest, I had to, but I stayed up one night and I just compared apples to apples, rapid protect to the fully underwritten. Rapid Protect actually performs pretty decent in comparison to Flex Life. Your target and cash value is going to be lower, it's no secret. But as far as the performance and pricing of the product, they're really not that different. I was really, really surprised at how well it performed. And I wouldn't just say that to you guys either.
Right. That's awesome.
Mhm.
Um, Blake asked a question. I believe with Flex Life, they're able to chat with an underwriter inside the client's info about medications or whatever it is. Can you do that with Rapid Protect?
Yeah, you can still go into X-ray. I've begged them to have a section in the underwriting guide that lists medication, but they can't. I would say this, Blake. Yes, to answer Steven's question, you guys can do the X-ray tool and get a message back from an underwriter. Look at the condition the medication's for. So if somebody tells you a medication, we're not going to have that in our underwriting guide, but ask them what it's for. And if they say depression or, I don't know, lupus, make sure you ask the specific condition, and then I would do your fact checking and your risk assessment with the condition instead of the actual medication.
Absolutely. Um, and I mean, I don't know if anybody else has any other questions, but you did a call a few months ago with us about increasing our placement. Um, can you give us a few tips to make sure that we actually get policies through instead of just chucking them at you and getting them declined?
Disclose the information, guys. Disclose the information. I know buyers are liars. Knowing what I know and of everything I've seen, if I'm filling out an application, and I'm not talking about Rapid Protect, I'm talking about fully underwritten, and every single question was answered no, I would literally pause and say, Mr. and Mrs. Client, you didn't go to the hospital recently. I purchased you as a lead. You didn't fill out another life insurance application. Are you prescribed a medication? Even if you're not taking it, are you prescribed one? It works in your favor to disclose the information. And the second part, just because it doesn't instantly approve doesn't mean that we need to do a paramed. So follow up on your new business requirements as well. This is the most common reason why policies don't instantly approve with FFL. It's because agents are not disclosing that the client applied with another insurance carrier. By the way, you just need to say yes. If you say no and they applied, it's going to go to an underwriter. They're going to ask you about it. If you don't reply to them in the portal, the case is going to count against your placement if it closes. You could literally say they applied at company XYZ, but they don't want the policy. Then they would issue the case.
Mhm.
So disclose the information and take your time on the apps. It's everything.
I love it. Ted has a question.
Okay, so I'm going to give you a very easy, simple explanation. If your clients want to max fund as much as possible in their IUL and they want to pay less than 7 years, you're going to go off of the MEC premium. If your clients want to pay as much as possible, longer than 7 years, you're going to go off of guideline. That's my most simple explanation. You could literally pay whatever is less between the two, and there's other kind of more complex scenarios. But I get the guideline and MEC question often. 7 years or shorter, seven pay MEC. Max funding 7 years or longer, you're going to go off of guideline.
Sweet. Good to know. Devin, I appreciate you, man. September 20th, right?
September
Is when we
20th.
have it. All right, because I can tell you this right now, the amount of people that we send to like I have a children's whole life policy on my kids because I'm like, whatever, right? But now that we have an IUL opportunity for children that they don't have to do all that stuff and like the application doesn't suck, like I'm in, I'm doing it. Like once we get off and once the app is live, like my wife and I we're gonna write two insurance policies on our kids. So I
Love
love
it.
it, man. Devin, thank you so much for taking time out your day and sharing this with us. We're excited to be able to send more business to National Life Group, and you guys are phenomenal. Thank you for everything you guys do.
Thank you, Stephen. If I see any of you Ignite, please come say hi next month as well. But thank you, Stephen. Appreciate you guys.
Appreciate you guys. Have a great one. See you guys tomorrow.